Silver forecast, why mining stocks could move in January. I want to talk about something that hasn't moved yet, but historically moves next. Silver mining stocks. Silver itself has already repriced higher. In just days, we've seen a sharp move from the mid-60s into the high 70s. That matters because in precious metals cycles, the metal almost always moves first. The mining stocks follow later, and when they do, they tend to move faster. So the question isn't whether silver has already moved. The question is whether the conditions are now in place for capital to rotate into miners. And heading into January, there are several reasons that answer could be yes. First, positioning. By late December, most professional portfolio managers are done taking risk. Books are cleaned up, performance is locked in. Anything volatile or controversial gets pushed into the new year. January is different. New capital comes in, allocations reset. Managers are no longer defending last year's performance, they're building the next one. That alone makes January a vulnerable month for under-owned sectors. Second, silver is no longer behaving like a speculative trade. We are seeing backwardation persist in parts of the silver market. That's a physical signal, not a paper one. It tells us supply is tight now, not later. And when physical stress shows up, mining equities tend to reprice as leverage to that reality. Third, industrial demand isn't theoretical anymore. Silver sits at the center of electrification, data centers, grid expansion, and advanced manufacturing. Those forces don't reverse because of one headline or one Fed meeting. They build over time, and that changes how institutions think about silver, not as a trade, but as a strategic exposure. Fourth, the monetary backdrop is shifting. Even before rate cuts arrive, a more dovish Federal Reserve changes expectations. Lower future discount rates improve financing assumptions for miners and expand what investors are willing to pay for future ounces in the ground. Mining stocks don't need cuts to move. They need permission. Dovish language often provides it. Fifth, and this one matters, career risk. When respected voices like Eric Sprott highlight how undervalued mining stocks are relative to the metal, that changes the conversation. At some point, being underexposed stops being conservative and starts being risky. When that recognition shifts from interesting to necessary, prices don't adjust politely. They gap. None of this guarantees that mining stocks explode tomorrow. Markets don't move on schedules, but the setup heading into January is clear. Silver has moved. Physical signals are flashing. Industrial demand is visible. Monetary conditions are loosening, and portfolios are about to be rebuilt. That's the environment where miners historically wake up. If you want a deeper dive into why mining stocks look so mispriced right now, I've linked below to the Eric Sprott video on undervalued mining equities. That conversation connects directly to what we are seeing unfold today.